Joining me now is Laurence Mutkin. He's the head of European fixed income strategy at Morgan Stanley. Laurence, thank you so much for coming in. It's going to be a very difficult year for a lot of these central banks because the economic divergences just keep on getting wider and they have to set policy for all. Are we going to get a rise anytime soon or anything from them?
Well, I don't know that they're going to get a rise anytime soon, but I think what's happening is that there's a change in the balance of risks about when there's going to be a rise. So if you think about the data we've had since, say, November, we've had evidence of stronger economic growth, we've had evidence of higher inflation, we have Eurozone inflation now above the target level, and what we have is in Euro land, as we do in so many places, is an interest rate level which is not just accommodative but is extremely accommodative and contains extraordinary measures. And I guess the question is, how quickly do we see the unwind of those extraordinary measures? We think the refi rate doesn't move this year, but certainly the extraordinary measures that have kept the overnight rate so far below refi will be withdrawn.
And yet, for the moment, they've actually been kept on despite early warnings that they'd be taken back on. If we get an unsuccessful bond sale or if there's more concern about periphery Europe, are they not going to have to continue keeping that extra liquidity on the markets?
I think that's right. And the ECB's shown itself flexible, right? And during the summer of last year, it obviously believed that it would be able to start withdrawing the extraordinary measures, and indeed has already withdrawn a few of them. But when it became clear that, in fact, the system was still very stressed, then they showed that they'd sort of hold off. So there's, in terms of what the ECB has to do, there is this sort of balancing act between the inflation and growth outlook, which are improving, and the worries over the peripheries, which are obviously a reason to delay a withdrawal of accommodation.
Laurence, do you buy into the fact that actually Portugal's debt sale yesterday was successful? Because we don't know exactly how much the ECB was buying, and there is talk on the market that they were wiping up quite a lot of bonds.
Well, obviously they didn't buy at the auction, right? That's not allowed within the S&P. And equally, we know the S&P does allow member central banks to intervene in the market when it perceives there to be a lack of liquidity or an unbalanced market. So, you know, it's undeniable that the auction, you know, went well. I mean, the bonds were sold. Equally, it's undeniable that the S&P is a part of the market now. And the question is, as the year progresses and all sovereign borrowers have to come back to the market again, what is going to be the interaction between the private sector and the central bank? But if I may say, ultimately this isn't about the liquidity is about each individual auction and about how the market's set up and about the potential role of official intervention. But ultimately what you need to do is you need to sort out the sustainability which makes the possibility of official intervention unnecessary. And I think that's, you know, we hear these comments coming out of the governments of peripheral countries all the time. You had just had a quote as well from Belgium. This is what they need to address, and I guess this is what they are, you know, showing they are addressing.
Yeah. Laurence, thank you so much. Laurence Mutkin there.